Hello everyone, and welcome back to Canada Pension Scope, your most trusted source for accurate, timely, and essential updates on Canadian retirement benefits, including the Canada Pension Plan, CPP, Old Age Security, OAS, and the Guaranteed Income Supplement, GIS. If you're new here, don't forget to subscribe and turn on the notification bell so you never miss a critical update that could impact your retirement income or monthly payments. Today's video is one of the most important updates of the year. We're talking about a major change that officially takes effect on July 9, 2025, and it directly affects millions of Canadians who rely on CPP, OAS, or GIS. This isn't just a routine deposit date. We're talking about major increases in benefit amounts, key changes to eligibility rules, and new reassessment provisions that could put hundreds of extra dollars into your pocket every month. So whether you're retired, approaching retirement, or helping a loved one navigate their benefits, this video is for you. Let's start with the Canada Pension Plan, CPP. As many of you know, CPP is a contributory retirement pension that most working Canadians pay into during their careers. The amount you receive in retirement is based on your lifetime earnings and your contributions. And starting July 9, a new phase of the CPP enhancement plan goes into effect. This multi-year enhancement was originally introduced in 2019 to gradually increase retirement incomes and make CPP more sustainable in the long run. Now, in 2025, we are entering a critical new stage. As part of this phase, the year's additional maximum pensionable earnings, YAMPE, threshold will expand further, meaning individuals who earn above the base limit of $68,500 will now be required to contribute more, but they'll also qualify for higher retirement benefits in the future. Key CPP changes in July 2025. The maximum monthly CPP retirement benefit for someone beginning retirement at age 65 is increasing to approximately $1,430, up from $1,364 earlier this year. This means a possible extra $800 annually for some retirees. A second-tier contribution bracket is now in place for those earning between $68,500 and $72,800. These earners will pay an additional 4% contribution on this income slice. If you're self-employed, you'll be paying both the employee and employer portion, so be sure to review your deductions and budget accordingly. While it may feel like a heavier load today, it paves the way for better financial security down the road when you retire. Now let's move on to Old Age Security, OAS. OAS is a non-contributory pension for seniors aged 65 and older, and your eligibility depends on how long you've lived in Canada after the age of 18. Starting this July, OAS payments will rise again, and the increase is not just tied to routine indexation. There's also a special top-up adjustment aimed at helping seniors cope with higher costs of living due to inflation. OAS changes effective July 2025. Seniors aged 75 and older will continue receiving the 10% permanent increase that was first introduced in 2022. Their monthly OAS payment will increase to approximately $842, up from $829. Seniors aged 65 to 74 will see their OAS payments increase to around $713, up from $700, based on the most recent inflation indexing. If you're wondering whether you need to do anything to receive this increase, here's the good news. If you're already receiving OAS, the new amount will be automatically adjusted in your July 2025 payment. But if you're turning 65 soon or haven't yet applied, it is critical to log into your My Service Canada account to confirm your enrollment. Many seniors mistakenly assume that OAS starts automatically. It doesn't. Some are automatically enrolled, but many are not. Don't risk missing out on payments due to an incomplete application. Now let's talk about the Guaranteed Income Supplement, GIS, which is arguably the most impactful part of this update for low-income seniors. GIS is a monthly benefit available to low-income seniors who are already receiving OAS. It's designed to provide additional financial support to those who need it most. And the updates effective July 9, 2025, are substantial. What's changing with GIS? The maximum monthly GIS for single seniors is increasing to approximately $1,118, up from around $1,065. For couples where both partners receive GIS, each could receive up to $665, making the combined support over $1,300 per month. This change can mean an extra $600 to $1,000 per year for eligible seniors. Importantly, new GIS eligibility rules now allow for income reassessment based on current income rather than the prior year's tax return. Why does this matter? Because many seniors had employment income or investment returns in 2024 that pushed them above the GIS threshold, but in 2025, they may have retired, lost a spouse, or experienced a health crisis. Now, you can request a reassessment and qualify for GIS sooner. How to apply for a GIS reassessment? Contact Service Canada directly. Provide documentation, such as proof of job loss, retirement, or a spouse's death. If approved, your GIS benefits could begin immediately based on your estimated 2025 income. Many seniors miss out on thousands in benefits simply because they don't know about this flexibility. Don't be one of them. What should you do right now? To make sure you're prepared for all these changes and don't miss out on increased payments starting July 9th, log in to your My Service Canada account. Verify that your banking info and personal details are up to date. File your 2024 tax return. Make sure all senior-related deductions are properly claimed. Check your eligibility for GIS reassessment. If your income has dropped in 2025, don't wait to apply. Talk to your financial advisor. Review how the CPP and OAS increases might affect your taxable income. Mark your calendar. July 9, 2025, is the official deposit date. Watch your bank account and check your statements. One last thing, taxes and clawbacks. CPP and OAS are taxable, while GIS is non-taxable. So, if your total income rises due to CPP and OAS increases, your tax liability might go up, and in some cases, you could hit the OAS recovery tax threshold, also known as the clawback. The OAS clawback now kicks in at an annual income of $91,920, with full repayment required once your income hits approximately $148,000. If you're near this limit, consider deferring OAS to age 70 or splitting pension income with your spouse to minimize the impact. For seniors living abroad, if you're receiving OAS while living outside Canada, remember you must have lived in Canada for 20 years after age 18 to continue receiving benefits. The government is now tightening compliance, and you may be asked to verify your past residency more frequently. Make sure your foreign address, residency proofs, and banking details are updated and accurate. These changes represent a significant shift in Canada's retirement income system, and they're all aimed at making life easier, safer, and more secure for seniors. But they only work if you understand them and take action when needed. At Kenyatta Pension Scope, we're here to help you navigate all of it, whether it's understanding a new benefit, applying for GIS, or avoiding tax traps. If you found this video helpful, please like, comment, and share it with someone who could benefit. And of course, subscribe and turn on notifications so you're always in the loop. Let us know in the comments. Have you seen an increase in your CPP, OAS, or GIS? Were you aware of the July 9th changes? What challenges have you faced navigating Service Canada or applying for reassessments? Thank you so much for watching. Stay safe, stay informed, and we'll see you in the next video right here on Canada Pension Scope.